Hi, I'm Bob, the Mortgage Coach Mitchell, and we are working on glossary terms today. We're into Q's, and there's only one Q. Yay! So that's qualifying ratios. We probably covered it earlier under I's for income to debt ratios. Basically, what the qualifying ratios are, there's two of them. There's a front end ratio and there's a back end ratio. The front end ratio is otherwise known as your housing expense ratio. That's where we take how much the total house payment is, principal, interest, insurance, and taxes. Even if you're waiving escrows, we do take the insurance and taxes into account. And we divide that amount by your gross monthly income. That percentage, that ratio is your front end ratio. Generally speaking, the guidelines say it should be less than 28. If we can keep it less than 33% of your gross monthly income, now those are guidelines, they're not rules. If you have a higher front end ratio, you might be able to make up for it by having a lower back end ratio. Now the back end ratio is the housing expense, the PITI, plus any monthly obligations, ongoing monthly obligations that you have. Child support, separate maintenance, car notes, student loans, MasterCard, Visas, signature loans, anything that you have a note on that pretty much appears on a credit report is really the key there, is going to be included in on that back end ratio. The back end ratio should be less than, they shoot for 36%. On FHA, you can go up to 43%. On FHA, you can actually go a lot higher than that depending on what the computer will allow you to get away with. If your credit's good and everything else is hunky-dory, good time on the job and that sort of thing, then you might be able to get a higher back-end ratio. But generally speaking, we like to keep that back-end ratio less than 43%. So the front-end ratio is your housing expense ratio. The back-end ratio is your total expense ratio. Those are really important things. You need to understand where they're at. There's a thousand other rules and regs that go in that's involved in them. So, and it can make a big difference from one loan officer to the other. I can't tell you how many times I've had people that have gotten turned down for a mortgage by another lender, and it was something stupid because they had a car note, they had 3 months left on it, and they said their back end ratio was too high. Stupid stuff like that. So that it's an important one that you understand. So if you have any questions about ratios, definitely feel free to reach out to me. I am Bob, the Mortgage Coach Mitchell. Now let's put you into a house.